On Thursday, bonds were down 28 basis points on the open. Stocks were losing just a couple of points as well. Bonds had a reasonably calm overnight session, holding flat in Asia and losing some ground in Europe. Treasuries had recovered most of the losses after the Bank of England announcement of an unexpected rate hike and hints at a pause next time. Jobless claims came in at 264,000 on a 260,000 forecast, was 262,000 last time. Continuing claims came in at 1.759 million versus a 1.82 million forecast. After initially positive reaction to the initial jobless claims, bonds changed course. Word around the campfire blames the announcement on a large corporate bond offering from Nasdaq that's expected to price today. Jerome Powell testified in front of the House yesterday, spoke to the Senate today. His overarching message is that the fight against inflation is not done. There'll be more rate hikes this week. Existing home sales were basically flat in May, rising only 0.2% on a year-over-year basis. They're down 20%. The median home price fell 3.1%, while inventory remains tight. There is also a positive revision to last month. Otherwise, we would have had a plus 0.5 gain this month, which is pretty good. Inventory is 101.08 million homes. Normally, about 35 to 40% of those are under contract. So we only have actually 582,000 homes available in the entire United States. Median home price is $396,100. First-time home buyers are 28% of sales. Cash buyers are 25% of sales. Investors are 15%, and average days on market is only 18 days, so it's pretty tight out there. It was day two of Fed Powell's congressional testimony. There are normally uneventful, as any bombshells for the week are typically dropped in the previous day's testimony, but Powell did put a different spin on things today thanks to one particularly worthwhile question, which was asked to define what it meant for the economy to evolve as expected, an important definition considering it is a condition is met by the government to proceed with 2 additional rate hikes it thinks will probably be appropriate. It turns out that the bar isn't as high as the market may have thought. Bonds were already on a run due to the hefty corporate issuance and initial jobless claims, but failed to inspire any sort of response to the previous 2 weeks. Powell's relative hawkishness simply offered no objection to the selling pressure. At the end of the day, we're down 44 basis points. Stock won with a 16-point increase at 99.69. We just bounced back down to just below that thick black Fibonacci line that has been a hinge for a month and a half now. So we'll have to see. We just can't decide on what range the market really wants us to be in.